Hey everyone, it's Evan here from the Trade Risk on Friday, August 25th, here with a weekend market recap video. We're going to cover all of the major markets, the current market environment, and then finish off the video looking at some sector analysis. This video probably be a bit shorter just because I don't have a whole lot to cover in this weekend's video. Not much has changed, right? We did our usual midweek video on Wednesday, and look at where we are right now here closing on Friday. Basically right where we did the video on Wednesday at the same exact level in the S&P 500. 244.56 was the close on Wednesday, and 244.52 is the close now. So we dropped 4 pennies since our last sort of market update. So I don't really have a whole lot new to say. I will reiterate sort of the themes that we talked about in Wednesday's midweek video, and that's basically do less, stay conservative, raise some cash, whatever you need to do to not get chopped up in this market environment. And as we always say, it's going to depend on your strategy and time frame. But for now, we're basically in the middle of a range where we have support down here indicated by these pink arrows down here right around 242 all the way up to 243. Then we have resistance over here, these last swing pivot highs here with a lot of supply up here right around 246, and we continue to trade right in the middle of all of that. So for me, it's a time to sort of just dial back, wait for the market to make its next move. If we start to roll over from here, then I think you have some actionable steps to sort of execute on. I think the interesting sort of short-term level that I'm now paying attention to, which was sort of created basically today with this close that we had at the lows here on Thursday, and then we had a nice sort of gap open. We tried to push higher, we failed, and then we closed near the lows of the session. I think this right here, right around 243.75, 243.50, effectively Thursday's lows. If we start to break below there, if we start to roll over from this level, that also coincides with this sort of pivot low here back from the 10th, I think you could get probably an actionable short or at least a stop run below this 243.75. So right out of the gate on Monday, if we have a weak open or if we start to open up and fail, I'll be paying attention to that level as a sort of a short-term active level to pay attention to. But in the broad sort of scope here, we're just consolidating, at best maybe moving sideways here. You can see the 8 and 20 period moving average on the daily chart, which is my favorite moving averages, are just bearishly aligned. They're very flat here. So once again, just sort of reiterating to do less. And again, that's certainly our approach mindset right now. The other interesting note, I guess, this week, market internals actually did start to improve a bit here towards the end of the week. I think that's interesting. Had some new highs coming in. I didn't check the final numbers, but I was watching it intraday, and we did see some advancers starting to pick up a little bit. Again, I don't think we're out of the woods yet. I think it just really speaks to the mixed sort of conflicted signals that we're seeing right now across sort of a wide array of indicators. So that's sort of the scoop here that I'm looking at on the S&P 500. You can rewatch Wednesday's video where I go a little more in depth on basically the same action. Let's move into some of these other major averages here. The IWM, again, you can see here a nice, getting a push off of the lows. I think that, again, just to step back here, it was a constructive sort of sign that all of the major averages rallied this week. So we alleviated some of that pressure. We alleviated some of those oversold levels that we saw last week. So that, again, is mildly constructive, up 1.5% here in the Russell 2000. That's a good defensive sort of stop by the bulls to get back above sort of this pivot low here for the IWM, start to get back above this trend line, which extends back from December of 2016. So there are some short-term wins here, but again, you still need to be careful. Look at the way these moving averages are aligned. So we're rallying into declining moving averages. So you got to just be a little careful. Again, I think, having some long exposure probably fine, just not all in, selectively, managing those position sizes, so on and so forth. NASDAQ 100 continues to just move sideways here in the same kind of mess. You can look here on the weekly chart, up 0.5%, so not quite as strong there as the IWM, but still very comfortably above these prior lows here, right around 141, and very much in the middle of this range with very sideways, fast-moving averages there. So that's the landscape. That's the way I'm looking at it. Next week, again, I'm going to be watching those short-term levels, particularly in the SPY. If we start to roll over from 243, start to break below there, then I think it's back to certainly a defensive stance. If we start to rally above 245.50, that's when perhaps we can get a squeeze back up to the upper end of this range. It's very tight, and I'm talking 75 cents in each direction. So again, those are very short-term sort of active levels to pay attention to. For you longer-term players, you're going to be looking at the weekly chart, so on and so forth. So that's the market environment. Let's take a quick look at some of the other major markets here. TLT. Position that we continue to still hold here. Got half of this position still on. It still continues to work. It's a slow mover. It's grinding, but it's working, up 0.5% this week. You can see getting back above last week's highs. If it starts to break down, say below this 20 period or breaking this accelerated trend line, I would be out of this trade. But for now, waiting to just see if this can start to accelerate and get a little bit more of a move higher here, perhaps back to those June highs. So I like it. Short-term trend is up. It is slow. It is, kind of, I don't want to say stalling. It's kind of doing its thing here as it's riding this 8-period moving average up, but paying close attention to it and trailing that stop. If we go to oil, we did finish the week lower. I think it was about 2%, minus 2.21% here on the downside. You can see 8 and 20 period still bearishly aligned. We kind of rallied right into it, and then we're starting to fade a little bit. We broke that accelerated trend line. Bulls started to stabilize us. So really sort of interesting to see how this ends up. Does it end up rolling over here, or can the bulls actually hold on above this 960 level? I think that's a pretty good line in the sand there. You can see up a bit on Friday here, but still down on the week about 2%. I think the level's pretty clear. Short-term levels, 960 or so to the downside, $10 on the upside. Natural gas, talked about this position as a long position that we put on this week. We still have it on. I hate the action here on Friday, but not enough to stop us out just yet. I'm really looking to see if this can hold above, say, the 645, 640 level into early next week. If this sees continuation lower, it's going to be a stop out for us. But for now, we're hanging in this trade on the long side, trying to patiently see if we can carve out some right side of perhaps, this inverted head and shoulders, this consolidation pattern. And, again, our original target was back up to test these highs up here right around 690 or so. So still in the trade, down on it for now. If we see continuation lower, it will be out of this trade, as it would just be a little too weak for me to stay around in natural gas. Metals, so gold, GLD had pretty wide range, some volatility here on Friday. We had Janet Yellen's testimony in the morning that seemed to have at least sparked it, maybe just coincidentally caused some movement, caused some of this intraday move. But, basically the short-term trend does remain higher. It's consolidating near highs. It's at a prior very important inflection points where we failed in June and April of this year. And we're right back towards those highs and just kind of basing out and trying to hold up in this trend, high volume coming in today on this large outside sort of range here. So GLD, I think it's interesting. Again, I think if you get some momentum above 123, 123.50, then I think, you could get that squeeze higher, into next week, into the end of the month. Silver, kind of the same situation here, had a very wide range day here on Friday, but still holding up in this bullish trend, much tighter over the past several weeks. You have a very clear sort of resistance line in the sand here, around 1620 or so. So if we can start to, follow through there above that 1620, break out above it next week, you might have something to take a look at. So pay attention to that if you are interested in those metals. And with that, I think we get to some of the sectors. Really, the standouts. IBB had a pretty standout week this week, up 2.3%. You can see back to the daily chart here, kind of putting in an undercutting double bottom and rallying back above this 311. Had not a great looking Friday here with this open up and failure, close on the lows. But if we can continue to hold above 308, 310 into next week, if we can stay pent up here, I think that's pretty interesting win there for the bulls in biotech. So something certainly to pay attention to. Materials also had a pretty good week as well, up 1.34%. One of the leaders on the week as far as sectors go. You can see staying very pent up here right around 54.50. Be an important level to see. Again, very similar to biotech. Can this hold up here? Can the bulls not give up, $54? Can we not roll over, and can we actually hold up and kind of push higher? So XLB, I think, is fairly interesting. On the downside, kind of the ugly, staples on Thursday here with a 1.38% down day on Thursday, breaking below this recent multi-week support. So that one getting a little bit ugly there, back to these lows around 54.50. So it's very, you could see probably trapped in this sideways range, but if it continues to roll over here and maybe make another leg lower similar to June and July, that would obviously be the very bearish sort of scenario for XLP. We're not there yet, not saying it's going to happen, but something just, to pay attention to if we start to really accelerate to the downside and lose that 54.50 level. And we also get that IYT. We talked about this on Wednesday, really just kind of hanging on by the skin of its teeth here with these recent lows right around 164. You can see clawing back here on Friday, high volume day, outperforming and holding up well on Friday. So something to take notice of with that high volume reversal. If we can get continuation above 165, I think that could be interesting. Save here by the bulls, but for now it's still, still in a suspect situation with the 8 and 20 period curling down or definitively down, and is still fairly vulnerable, all things considered. It's on the bulls to get that follow through back to the upside to prove it otherwise, to prove us wrong that this downtrend should be ignored. So that is the recap. That's all I had to cover. A little bit shorter this time around. So I hope everybody enjoys the weekend. It's getting into the end of August. It's actually the last weekend of August. Didn't mention that at the top of the video, but it's going into the end of August. September, usually when we come back from that holiday in September, Labor Day, we start to pick back up with some volume and perhaps volatility and maybe a new direction. So it'll be interesting to see how we come into September, how we start that first week or so. Hopefully everybody's rested up and enjoy this weekend. Thank you so much for watching, and talk to you again soon.